right, so you want to be a real estate investor, particularly in San Diego. I've got the guy to talk to. Derrick Harms is here. What's up, brother?
Hey, what's going on, Derrick?
Great to see you.
Again, man.
So, you've kind of always been a real estate investor. Also now, you've been an agent for a while as well, right? You were doing that more heavily at one point. Now you're mostly focused on investments, right?
That's correct. Yeah, I still have a large component of my business is retail sales, and over the years, you'll see in the investment world here in San Diego, you create a book of business and a name for yourself, and so those referrals will keep coming in, and so you never want to throw that away, and you always want to keep growing. But for the most part, I focus on the investment side now simply because real estate as an investment will create wealth for you. Owning assets long term that grow in value over time will create wealth. And I like being a real estate agent, but again, it's working for a commission check, and it's not actually creating an asset that will keep exponentially growing in value over time.
Yeah, putting your money to work for you, right?
That's it, man. So one of my mentors told me one time, there's only two things that work for you that make you money while you're sleeping, and that's interest and rent. And you can go to sleep if you own these assets, you own a note, or you own a piece of real estate that creates rent. You go to bed at night, it's still working for you.
That's right. So either you work for money or money works for you, right?
Very well said.
So a lot of people want to do this. I want to pick your brain. Thank you so much for coming in today for this, because everybody wants to know the secrets. How do you get started? How do you do this? How do you do that? And San Diego is a very competitive marketplace to do any kind of real estate investing, right? Everyone, there's not everyone. There's lots of real estate investors in San Diego. There's lots of flippers in San Diego. And so I want to also define the difference between the two. And by the way, a lot of the great real estate investors that I know are also real estate agents, because they find a lot of deals that way. You talk to someone and say, I want to sell my house. Oh, I really don't want to put it on the market. That makes me uncomfortable. I'll buy it from you. That stuff happens all the time. Or you hear about deals. Oh, my friend wants to sell their house. Oh, have them give me a call. Oh, okay. Well, they really want this. They want it to happen that way. Oh, well, I might have your buyer. It might be me. So
precisely.
You know what I mean? That happens, right?
A lot, yeah.
So it makes sense. But I mean, as far as where do you begin? How do you invest in real estate? Do you think the smartest thing for people to do is first and foremost buy their primary residence?
I think the answer to that question is it depends. Your primary residence is not an investment. It actually costs you money. It doesn't make you money. So I don't look at your primary as an investment. Now, with that said, there are ways to actually make a lot of money on your primary by house hacking. I did it in my first house. If you live in your primary for more than 2 years, I'm sure you know this. I know a lot of people watching this know that as well. You get a $250,000 if you're single, $500,000 tax exemption on any capital gain on that sale. So that works really well for people. But granted, you have to have that plan, and that needs to be your model, if you're going to get into it that way. But so I think there's a difference between investing in your primary, but and then you mentioned it earlier, house flipping is not really investing, but it can open the door to investing. So house flipping is a business. It's a grind. You work daily on this, 9 to 5. You are a professional firefighter. You put out fires every single day. Your money's not really working for you. You have a team or whatever you're doing, but it's a business model. But what that can do is maybe you flip 4, take those profit checks, and hold on to 1. And that's lately what I've been doing is flipping properties, turning some of those profits into long-term holds. And to me, that's the model.
Okay, and I want to go further with you on that. And I also want to agree with you. I've been saying this for years. If you're a subscriber here, you know this. When you buy your primary home, it is not technically an investment. It's a hedge. And hedges can be looked at as investments, but really a hedge is something you do to protect your investment typically. And your investment is in your housing. You've got to live somewhere. So if you're going to be renting, rent goes like this. But if you buy a house, you get your payment fixed in for the most part, right? I mean, taxes and insurance can change a little bit, but you fixed in, so you hedge your housing cost. Okay, this is going to be a housing cost for the next 30 years, then boom, it drops down to this. So it is a hedge versus an investment. When we're talking about here straight investments, okay, let's get out of the hedge game, let's get out of the primary residence discussion, and let's go to like actual investments.
Can I piggyback on that for a second, though?
Please.
Yeah, I think it's important. So I agree with that completely. And I think even deeper down that hole is the hedge is the 30-year mortgage you attach to that property, because right now with inflation, where I think it's at and headed, I guess that people can argue that, but feels like inflation and it's going to be here for a while. You're hedging that value by 30 years by locking in that payment. And now I'm looking at investment real estate in San Diego. I like the 2 to 4 unit space because you can still put 30-year debt on it. And I look at the 30-year mortgage as the asset and now the property as the liability. Because long term, right now, when I think the devaluation of the US dollar, if I'm locking in this low interest 30-year debt on 2 to 4 unit properties that generate consistent cash flow with rents that'll increase in value over time, to me, that's the moneymaker. That's the winner right there. So I think it's like the hedge goes a little deeper.
Yeah, I like that second tier discussion on the hedge against the inflation, which real estate is pretty much no matter what.
Correct.
But we also saw there's some tax proposals this week that are attached to the infrastructure bill for showing higher taxes for people. Real estate's always been a great place, a great tax safe haven, if you will, especially with the 1031 exchange to be used, the capital gains exemption for your primary, as you mentioned earlier, the ability to depreciate the asset if you want to. You don't have to, but you can. And so I think it's going to become even more so the case with if we see higher taxes come in. But as an investor, so, there's multiple ways to go about it. There's flipping. We kind of talked about that. That's not really what this discussion is about. There's, buying your primary. That's really a hedge. We talked about that. But then there's buying and holding. And this is really where you can do really well, in my opinion, with real estate. If you can buy a piece of real estate and keep it for 10, 15, 20, 30 years, you're going to do great. You're going to do great with that. And you could pick any period of time you want in history. And you give it the good long time frame like that, and you're going to do great. But in San Diego, it can be tough because prices are high. And even though rents are high, cap rates here are much lower than in other markets. So a lot of investors like yourself get drawn into Ohio and Indiana and, have you seen the cap rates in Idaho?
Sure.
Has that ever tempted you, or do you feel strongly about the San Diego market?
So I actually used to own mobile home parks out of state, Florida, Oklahoma, to name a couple. And what I found was that bringing this all back close to my backyard made it a lot easier for me to manage. I know this market really well. I don't do anything in those markets anymore. Not to say you can't. I know a lot of successful people who have out-of-state investments, have teams, they have boots on the ground, they have resources. I would say if you're going to do that, you at least have to have those components. You have to have some sort of infrastructure. You shouldn't just willy-nilly pick a market because of a high cap rate. And I would argue that, yeah, cap rates are low in San Diego. Or what would you say, 4% or so is like a standard trade right now. Maybe even lower sometimes on stuff that's like A class or really well performing. But I've been able to successfully create 8 and 9 caps on stuff and lately. But it's all about creating value. You don't buy it like that. You buy a property that you now have to create that value to get to that cap, and it's going to take either adding another unit or reconfiguring what you have and raising rents and then refinancing at some point. And then when you can do all that, well, now you're sitting pretty and you're able to actually create the returns you want in your own backyard.
Okay, so value add investing is really where you're seeing the biggest bang for buck right now.
For me, yeah, you can't just walk into an 8 cap anywhere in San Diego. I mean, I never say never because there's always that random deal that someone can do that where you walk into a return like that. But for the most part, unless you're doing a really creative financing structure, which that can be done, and that's like I said, I never want to say never, but it's hard to find. And so if you want those returns, you have to create the value to force it.
So what's the best way to do that? Are you talking about adding ADUs to property? Are you talking about adding square footage to a home? And how do you execute on that? Do you use financing or cash?
Absolutely. So my favorite model right now is to buy like a 2 or 3 unit property and add a 3rd or a 4th unit to it. And what's happened lately is the density laws in San Diego have loosened quite a bit. And if you're in a transit priority zone or you have or in other certain overlays and the parking restrictions are reduced, and so you can essentially take what you have and create what you need. And so my favorite model lately, as like I said, have been adding units. ADUs, yes, although you've heard some pushback from people saying, well, when you go to refinance and get an appraisal, well, appraisers don't know how to value these ADUs. Are they square footage? Are they 3rd units? And I personally haven't had that issue. One thing I'd recommend is go record a notice of completion after you finish your ADU. With the county, you get the address recorded, and you get a bona fide address with the USPS. That's made it really easy for me to go to the appraisers, and I give them this huge packet of information and show them why this is the third unit and why it should comp out with the other 3 units in the neighborhood. Yeah.
Save this video, save that one, time stamp that, because that is something. So you're actually getting an address for the ADU.
Absolutely. Yeah.
Wow. That makes it very legit. I'm just thinking from a lending perspective, like when you don't have an address, it's technically not a unit for lending. So if you have a home with an ADU, that's considered to be a single family home that has an accessory dwelling unit. It's not considered to be 2 homes. However, the reason that that's important is because if you're trying to finance and use rent from the ADU, if it's an ADU, you can't use that rent unless you have a history of it. Whereas if it's an actual unit, you can use market rents or projected rents. So for you, when you go to sell those places, you've added tremendous value. You've increased the number of buyers who can buy that place because you have that unit on there. You can also provide the rental history to the buyer and say, look, here's the rental history, here's the tenant. That will also help them get financing, by the way. So those are just things that make things good for you when you're a seller. But I don't think you're going to sell those kinds of properties, right? You're going to keep those things forever.
Yeah, that's the plan for now. And going back to my previous point about the 30-year mortgage being the asset, like I want to collect as many of those as I can right now, at least while the interest rates are so low and the leverage is high. So I just got I closed next week on a refinance on it was a duplex. I turned into a triplex. I had a 3rd unit, and I bought it for $825. It appraised last week at $1,625,000, and I'm pulling out like $200,000 tax free, and I got a 3.25% interest rate.
Wow.
On a non-owner occupied investment property. And that's insanity. You
That's
guys, like
incredible.
Historically, that's just ridiculous for a non-owner occupied structure.
Cash out.
Yeah, cash out.
Non-occupied, cash out,
Cash
multi-unit.
out. That's correct. Yeah.
Investment property, cash out, multi-unit. That's incredible.
Feels like there's this window right now of like that's a thing, that our lending institutions are okay with this non-QM stuff. They weren't when COVID started. I'm sure you remember, like got a little weird for a minute, and then the timing, it feels like, has gotten a little looser.
Well, what's good is that is QM. So you're not going unless you're getting, depending on the income documentation that you're using, but you can get that deal through Fannie. And except for let's see, all right, in your case, your loan was over 750, 350, so never mind. Yeah, you're correct. That's not Fannie. Fannie would go, no, it would be because the more multi-units, the loan amount caps increase per unit. So you technically could do that, Fannie. But anyhow, I digress on the specific lending jargon. It gets complicated though. Like lending can be complicated. There's a lot of little nuances sometimes and things like that. You need to I always like to get a clean slate and go, okay, let me clear my head. Where is this at? How does this look? Or run it by someone else. Because there's so many different opportunities like that. And it's amazing the things people are able to do right now to take advantage of it. Especially VA homeowners who are adding ADUs, doing cash out, and then taking the money and adding ADUs to their property. And that's the reason why I said bookmark what you just said right there, because for those people, they are going to sell. They're going to sell in 3 or 4 years. They're doing it because they want to maximize their investment opportunity in the home that they're living in. And that's one whole nother way to invest, right? It's like you're already vested in this home. You're hedging your housing costs with this home. Now you're investing in the ADU. You're saying, okay, it's going to cost me $125,000 to put it here. It'll increase the property value by $250,000, and we'll get $1,500 a month every month while we're here for it.
It's important what you just said. So let's use round numbers. Let's say you live in your home, you own it, and you add in a second unit, an ADU. That's called $100,000, and that generates for you $1,000 a month in rent. Well, where else can you go invest $10,000 or $100,000 in real estate to create a $1,000 return? That's very hard to find, but you can do that in San Diego right now by adding those type of units. Now, granted, those numbers don't quite align, but then you maybe extrapolate those. $200K and gets you a couple grand a month. That's really reasonable. So that's hard to find anywhere, really. So it's just such an awesome opportunity that I feel like more people should take advantage of.
I know. And we've had Kehlani Krutzenberg on before from ADU Geeks. We've talked about the opportunities with ADUs, and there are a lot of people looking into it, and it is a big project. I have some people who are just finishing up their ADU on their property, disabled veteran family, and they're finishing up their ADU from their cash out. Then we're going to get them into a conventional loan, free up their VA, so they're going to want to buy something else eventually.
Cool.
And so, yeah, there's perfect opportunities like that. What a great deal. What's going to be really interesting is to see when those kinds of properties start hitting the market, because they're so few and far between as far as what's actually on the market. I did have a client recently buy a property that had, we would call it more of a granny flat. It was in Fallbrook, a little bit different setup, not a dense area, kind of deal. But those kinds of properties are highly, highly desirable. And I can't tell you how many buyers I have who would love to buy multi-unit properties. So for anyone out there who's considering, putting something together, listen to what Derrick's saying, because having a multi-unit property, having one that's legitimately a multi-unit property, even if it's an ADU you get an address for, this is huge for when you go to sell. Now, your goal right now is to basically maximize the financing opportunity. You're looking at this like, hey, I have loose lending scenario. I have a situation where rates are low. I can get cash out on these things. I can put cash into it up front and get my money back on the other side. And so you're looking at it from that standpoint, right? Like, this is what I want to maximize right now. Does it concern you at all that the market has gone up so much in such a short period of time when you're looking at new projects?
Yeah, of course. I mean, I think we're always looking at values and get concerned a little bit. But I feel like if your goal truly is long term, and these are truly holds that you're going to hold for 15, 20, 30 years, you don't care as much about the value. You care about the cash flow. So as long as these properties are penciled to cash flow, then I think you're in pretty good shape. Now, granted, a lot of this depends on values, right? If you're going to go refinance, you're going to need an appraisal. You want that appraisal to be high. But at the end of the day, if you can create an asset that creates cash every month, you're going to be in a good spot. You'll find someone to lend on it, even if it's not necessarily a Fannie and Freddie product. There's a whole level of private financing out there if you need to go down that road. But a lot of those guys will lend on the asset. So if the asset generates cash flow, you'll find a lender. With that said, the beautiful thing about cash flow is that, and rents in San Diego, is that I went back and looked at all the data from the market crash back in '08, and I looked at rents in San Diego, and the average rent in San Diego went down $50. That was it during the whole crash in from 2008 2010. $50. That was it, and that was one of the worst down cycles of our lifetime. One could argue that market dynamics could be different in the next crash, but that's a pretty good indicator if in one of the worst crashes in 50 years or so, even longer than that, we only had $50 decrease in rents. So
I can tell you a big reason for that. Rents were already so low because a lot of people who would be renting were able to buy because of all the weird financing that was going on. I remember looking at a home in Escala and almost bought it. And I was like, you know what? I'm gonna take a step back for a second. And for whatever reason, I went and looked and saw a house that was like on the other street, same model match, was renting for $1,800 a month. They want $700,000 for the place that I was looking at buying. I was like, $1,800? Wow. And when I called, they answered right away. They wanted me to come by, so there weren't people knocking down the door to rent it for $1,800. And this was a nice house. It's like, well, gosh, if I want to move in here, I would just go there, rent there, and make sure that I like the place, and then buy something in here, So back then, it was actually rent was working against the market. Now, rent is really working for the market because rents are higher, and that pushes more people to buy. That pushes more people to look at buying. That pushes more people to consider buying. So that's one thing that is a big catalyst right now, I believe, that's an underlying layer of protection for this real estate market, is that rents are so high because of the demand for rental properties, for homes to rent. There's just as big a demand for that as there is for homes to buy, maybe even more so. Talk to anyone who's listed a place for rent. Have you listed that place for rent yet?
Oh yeah.
How many applications you get?
I think we had 14.
Yeah, immediately.
Yeah.
So it's like you get tons of people who want at any price point. So that is a very, very good sign, I think. I'm gonna blow your mind with something here. I'm gonna blow your mind too.
Can't wait. Yes, I like this.
It is easier to buy an investment property than it is to buy a primary residence if you have the down payment. That's the only thing. Because when you buy an investment property, you get to use the rent as part of your income for the calculation. So I have a lot of people right now who are in a situation where maybe they're self-employed, they don't show a lot of income or having a hard time income qualifying, and maybe they can't find a cosigner or don't want a cosigner. They have the down payment, but financing is going to be difficult for some reason. It could be credit score, or there's a lot of reasons. Well, buying that investment property is actually easier because, especially if you want to go to a certain price point, because you can count the potential rent as as income. So you get to add income in for buying the home. Isn't that wild?
I love it.
So there's ways. It's something where if you have the money down, it's much more difficult to be denied the loan.
Isn't it 75% of the income that you can?
Yeah, rental.
Rental. Okay.
Projected rent. Projected rent per the appraiser. You can use 75% of that.
Great.
It's huge.
Yeah.
Especially when rents are $3,000-$4,000. I mean, you could say if it's $4,000 projected rent, which would be the average house in my neighborhood, probably in Carmel Mountain Ranch. The average rent on the houses there probably $4,000, maybe more. But let's use that for round numbers. Then you're adding $3,000 a month to your income to help you qualify for it, which is huge. So that's something from an investment perspective. People get discouraged. They think investing is hard. They think that they're not going to be able to do it. Just wanted to throw that out there. That actually can be easier.
I like that, and I think debunking investing in general is really important because there's this stigma out there, especially in the real estate agent community, and that this is so hard to transition from a real estate agent into investing. And it's really not. You know how to speak the language already. You've been doing this for years. You've been selling houses. You know how financing works, et cetera. You just shift a little bit into now I'm a buyer of real estate. I'm not a facilitator of a transaction. And it just takes a couple different pivots, and you can easily do it. And when you find the right deal, you'll know it if you start surrounding yourself with other investors and you start seeing through the lens that they see through, and you start meeting their contacts. And it's just an amazing thing that happens once it clicks and you get it. And I think real estate agents have the easiest path because you're seeing deals every week. You know people in your office. I can't tell you how many deals that I've done with people I have worked with in previous real estate offices, whether that was Berkshire Hathaway or Compass or even Prudential before that, where I was at. And it's, those people remember you, and they know that you're the investor agent, and they'll bring you a deal because they know you're a good person and you follow through, and et cetera. And, you have to have a good reputation in any real estate business. But as an investor, there are some slimy ones, but the good ones, I think the cream rises to the top. Everybody remembers who you are, and they'll do repeat business.
They'll want to work with you.
Exactly.
At the end of the day, listing agents are picking who they want to work with.
That's correct. Yeah.
So you want to be someone who other people want to work with.
Absolutely. And you just got to do right by people, close on time, realize people are the ROI of this business. It's, granted, we all do this to make money. None of us really do this for fun. Maybe someone does, but for the most of us, we're doing this to make money. But the people are the most important component of this. You do right by these people, well, then it'll come back to you.
Next time we have you on, I want to get nitty gritty with some of these things. Maybe we can look at a project that you've done.
Love to do that.
About
I love
the
case studies.
Specific things. Yeah, the case study of the specific things you're looking at, where you want to make improvements, how you want it to be, where it's worth investing your money into the project. I think that would be really cool if we could do that next time.
I would love to do that because I have a couple that I've done lately where you had to make some really calculated and big decisions early as to where you were going to allocate capital and what kind of return that was going to generate, and it ended up working out pretty cool. So I think people would get a kick out of it. And I've got some things not to do that I've learned the hard way, which are almost more important lessons.
I was going to say, those are really important lessons, the not to do's.
That's right.
Derrick, thanks so much for coming
Absolutely,
in, man. Derrick Harms, people. Hey, listen, you want to be a real estate investor, you're going to need some advice from someone who's been in the game. So check out future episodes with Derrick Harms right here in Smarter San Diego, and share this with your friends. Let's make them smarter than everyone else.